Folks, we are now about 4 minutes away from what is being called one of the most important earnings reports of the quarter. It is Oracle, percent year over year, on revenue of $16.9 billion. And because Oracle has so many deals with chip makers and AI companies, analysts say it is very important to see a clean print on revenue, specifically the cloud infrastructure division. The stock is down about 22% year to date. Our countdown closer says, no. He's got an AI infrastructure play like better. Here's NFJ Investment Group senior portfolio manager, Burns McKinney. Well, Burns, how closely are you watching Oracle earnings?
We're keeping an eye on Oracle just insofar as that it is the type of name that is going to move the markets, and the markets are constantly aware of any earnings reports that might drop some clue going. If you actually do want to get sort of a maybe a discounted play on that, Microsoft might actually be a better way to go. I mean, you can get Microsoft for 24 times earnings. You have a name right there that you have one of the last remaining AAA rated balance sheets out there with a net cash position for a company that their cloud business is growing at triple digit rates, and you're already actually able to take advantage of that. They are monetizing AI. We're watching the Oracle news, but as far as where we're investing, that's not quite the direction we're going.
Yeah, although we hear that Copilot is not entirely lovable by people who use it. That said, Prologis might be another play, because I see you have that as one of your picks. This is a REIT, a real estate investment trust, that handles a lot of data center properties, and it's got a good dividend yield.
You get in that a dividend yield that's more than twice that of the U.S. stock market. And what we'd really like to hear is they've been growing that dividend by roughly 10% per year over the past decade. You love seeing companies that are returning cash to shareholders, and you get that compounding of secular trends in things like e-commerce, onshoring, nearshoring, and the utilization rates remain very high. So you do get a bit of a visibility in those earnings streams, which is something that can be safe in a volatile markets like we have right now.
Oh, we sure do. Burns, thank you. And